Everybody, and happy weekend. It is Wes with Pikes Peak Trades. Excited to give you my latest video update at the close of the first quarter 2023. Important quarterly candles in, important monthly candles in, and the evidence is stacking up very favorably on the bullish side of the ledger. And I want to take you through a lot of things I follow, not just indice or individual stock charts, but a lot of other technical readings. And I would ask that if your bias has been squarely bearish and you're still thinking that we are in some sort of secular bear market, I would ask you to reconsider, keep an open mind to some things that have developed here over the last few months. So if you've been following me for a while, I've been talking about the importance of this 8 quarterly EMA. And when it lost it in June of last year, I started sending out some warnings that continued losses of that quarterly EMA is what kicked off the worst of the most recent bear markets that we've had. So this would be going back into the 70s period of stagflation. You can see the dot-com burst. You can see the continuous downtrending closes beneath that 8 quarterly EMA. Notice, never once did we get a back-to-back green quarterly close. Same thing in the GFC, which I'm counting all of this together as a super cycle bear. Never back-to-back green quarters. Never did we recover the 8 quarterly EMA until that bottom was sufficiently put in place. Look at what just printed in March. This is not bear market behavior. You do not get back-to-back quarterly prints of 7% up. You do not get a resounding print higher than this 8 quarterly EMA. That close at about 41.09. We've got that close well above that 8 EMA, about 150 points above it. This does not happen in ongoing bear markets. So this, along with some other technicals that I'm going to show you here in a bit, puts the probability squarely on the bullish side of the ledger. In fact, I would say it is a 90% plus probability. I think the only thing that could reverse this would have to be a historical black swan event, something that comes completely out of nowhere. This is not a price pattern that happens in ongoing bear markets. So my count remains that we put in a cycle degree, COVID bottom, a primary 1 into a 2 down. And now we are looking squarely ahead at what I think is going to be a very large, very surprising move. What I think would be a fresh bull leg for the majority, if not all, of the rest of this decade. Okay, now I want to show you some other technical things here. So I want to talk here about the Zweig breadth thrust indicator. So you've seen a number of really good technicians have been talking about this. It triggered below the 0.40 level here, this ratio of advancers versus decliners, mainly using the NYSE here on Friday, March 17th. And then the trigger says you've got 10 days for it to get above the 0.615 level. Now, you can't see that updated print here, but it will confirm on Monday at about 0.62. We have a ZBT that did trigger. Now, depending on whether you use a 0.60 or a 0.61 or a 0.615 level, we have had roughly about 15 of these in about the last 70 years. The last one above 0.615 was in January of 2019. That was not exactly a time for you to be overly bearish. Again, depending on that 0.60 level, there was one that did trigger in January of this year. Also in March and June of 2020. So when these ZBTs cluster closely together, given the rarity of their occurrence historically, we've got further evidence that we could see a rapid movement upwards in stocks. Okay, now, with that said, I would like to point out that we are very short-term overbought. So we have NYMO about 10 points above its upper BB into kind of some nosebleed areas up here where we've then seen the S&P pull back. Now, I'm not saying that a pullback Monday is imminent. I don't know, because when I show you wave counts, I'll show you that where we're at, surprises can be to the upside. But when I see short-term signals like the NYMO and the S&P above its upper BB, you're going to see that as a theme through most of the charts that I'm going to show you. This is typically a place that we're going to get some cooling off. Okay, so while my long-term thesis, long into very long, is squarely bullish, I think in the short term, let's say early to midweek, we should see some resting profit taking type moves. Okay, now I want to take you through comprehensively these other candles. And we have a hammer candle on the SPX monthly that engulfed the body of the previous month in Feb and is now solidly above all of its monthly EMAs. This is not a bearish look. We get into the weekly. We see a weekly, essentially bulls in control candle. That low was set on Tuesday, but it wasn't much below Monday's low. Bulls in control here on the week, now solidly above that key 50 SMA. And now on weekly charts, I want to point out this because you're going to see this really clearly in XLF and IWM. Typically, traditionally, when we see stabbing attempts into the 200-week SMA and then a quick recovery, those have historically been buy signals. And I think when we see that in financials, I really hope that you'll be able to see here that we have a lot of things that are lining up. Okay, let's take a look here. Let me keep on with the same index here. Let's drill down into the dailies here. So let me get you into SPX daily. And here we see, just look at this move, that this is typical of a wave 3 of 3 in Elliott wave. We see hammer, gap, 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 and then a bulls in control here. Here is that look above that upper BB into the smaller time frames. And now I can start talking about where I think we could be pulling back. So I've got this in a sub-minuet 3 of 3 of that larger minute and minor 3. This is a bullish wave count where surprises occur to the upside. And if you were with me this week in trading, we nailed it. We were letting things develop. We were knowing where to place trades. I'll take you through a couple individual looks on that. Now, that doesn't mean that I nailed this from bottom to top. You always take profits. You make sure you take care of your needs. Then you let a few run for some wants and luxuries. I think we're extended enough up here with some short-term RSI and MACD divergence. I've got a wave 4 here on tap for a pullback, 40.50, let's say to 40.70 for that wave 4 area before I think a dip gets bought. Okay, now, really clear that we talk about invalidation. This is one of the main reasons why I love trading and charting, mapping, projecting with Elliott Wave. You cannot have a degree 4 trade into a degree 1 within a larger move of 3. So we have a very clear level here on the SPX that would invalidate this count. Anything that pierces 403.83, this count, the way it is drawn, is not correct. And then maybe at that point, we can entertain that this is just part of a 3-legged bear market rally. But until that happens, I think we are in dip buying mode. I would recommend for not only your long-term investing, your short-term trading, that is the way that you go. If you were bearish from Tuesday of this week, you got destroyed. So let's keep the price as our main signal, filter out the noise, and I'm looking for an opportunity to add on a dip early this week. Okay, want to march you through a lot of the other main indices and ETFs. We want to take a look at the Qs. Look at that monthly candle here on the Qs. Outside, complete bullish engulfing. This is not a bearish look on the Qs. Into the weekly, we can see a weekly BB close right here at this really key pivot, which I think is the neckline of an inverse head and shoulders classic TA pattern. Weekly BB closes are rare in any indice or individual stock. We did have one that closed the first week of Feb, and that's what kicked off the selling into our second double higher low. I think it's likely that we do see some pullback here in the Qs. I want to show you the corresponding look on the Nasdaq composite here, because it's right up there approaching that key neckline, but above the BB, matching what happened here in early February. And so I think it's more likely that we pull back first before we attempt to try to crack it and move up to the measured target. So where do I see that in the short term here on the Qs? Let me find that for you. And I think we're looking for maybe a little more of a degree pullback here in big tech. Now, this gap up here at 322.86, that could fill. We could see kind of a gap and crap type move on Monday first until we get a three-legged pullback. If it stays below and doesn't fill that gap, I think my primary look here is to actually look for a quick scalp onto the short side. We just have to wait and see what develops. I'll be very interested to see with the short-term overbought conditions what happens Sunday night futures here into Monday morning. But something back down to maybe this 313, 312 level. Could even see a gap fill here of that gapping move from Wednesday into Thursday's open. Would not surprise me at all. Okay, before we get into the individual names, which I'll take you through in big tech, I want to take you through the other important indices and ETFs, and we've got to be looking here at financials. So we saw what I think was a pretty crucial hold, retesting hold of the 31 level on XLF. That was the super cycle top before the GFC crash. It was the topping level in early 2018, and what I think was a false attempt right here before the COVID crash, and it just tested twice and recovered. And I look at that as being crucial to this market outcome, that we have to see banks, all the banks, from the big ones to the regionals, get back in line in order for my very, very bullish projections to play out for this decade. Into XLF, I talked about the importance of the 200-week holding to prevent something worse from happening. And we've got 1, 2, 3 stabs, and now what I think is a recovery. So this is critical evidence that we need. We can also see that we had hidden bullish divergence. We had lower weekly RSI where closing prices remained upwards. And so if I'm right here, we need to see a rapid, quick recovery here in financials. Okay, into the daily. Now, this is kind of a move up without much of a pullback. So I think we could see financials pull back and correct all of the price from the March panic here in the banking sector. We could see a substantial pullback here in XLF. Again, speculative, but on short-term divergence and in general overbought conditions market-wide. That's going to be my primary look into midweek. Okay, now I want to take you, before we get to industrials, I want to take you into small caps, because we know the heavy weighting of smaller banks within IWM. And we've got here a look that needs to improve. So there was divergence building on the monthly through the October lows, but we need to see small caps recover all of these key monthly MAs. And that's going to happen above about 188 into the weekly. So we see some key pivot areas, some double bottom looks through October, some stabbing attempts back. And now we've got to see this recover, these key weekly MAs above 182. That is where I want to see IWM close for this first full week of trading in April. Into the daily, I think this count matching XLF makes sense, that we're looking for a first pullback attempt to set the double higher low, minute 2, and that's where I'm going to have you here on the small time frame. So speculative, especially with price that was up above 179 after hours. But if we see another stabbing attempt up to open Monday that fails back inside this channel, my primary look for trading, not for my long-term investing, but for my trading, is to hedge to the downside. Okay, let's get back into industrials because I want you to see the full scope of everything that I'm charting here into DIA. And again, this to me, that's not a bullish or bearish candle. That is not a bearish look. It sliced all the way back upwards through the key EMAs with the solid close above all of them. Now, using the Dow here, you know, there's a lot of waivers and technicians out there questioning the S&P and the Qs in their move up. And you just look at this move in industrials from October into the December high, and the magnitude, the strength of it, it is not like these other moves down. We have a clear 3 waves down into this. So I think it's pretty hard to argue here against the establishment of a bullish 1-2 here by Elliott wave theory. And if you want to stand against that and stand against the historical evidence that I've presented, it's your choice. But I think you run the risk of being on the wrong side of what could be a generational type move. And I really do mean that. And I do not want to miss it. So I've got here within a minute 3, I had shown 2 times charting on Twitter this low and this minute low, and look at where we're at. We now closed strongly above that 50-day, but again, I think a little rest in store. So I think for industrials, I'm charting here a wave 4 pullback. Could we stab up and try to get a little bit higher into the fib zone towards that March B wave? Absolutely, before we pull back. Let's just see what happens. But I think, again, a lot of confluence for a small time frame pullback early this week. Want to make sure we also take a look at ARKK, because you want growth stock exposure if this launch pad is building. So here we've got an inverse head and shoulder, a classic pattern, along with the bull flag. We've got a massive volume point of control. We get above this 50-week SMA, you want growth stock exposure, which I've been building since the end of last year. Here we see that on the daily, tapping right up against its upper BB. Now, here, because of that not being above the BB, unlike the Qs, unlike SPX, maybe we need a Monday close above this BB to solidify market-wide overbought conditions before a pullback. But we get into the small time frames, and I'm just looking for a pullback within a very bullish 3 of 3 move up. So will be certainly my intention here. My eyes is going to be on growth stocks to see if we can get another buyable dip, just like we got on Thursday to end the week. Okay, now wanted to take you through on DIA, a short-term trade setup that I gave and signaled out to my trading buddies here. I didn't want to see on Thursday's close price of this 4 move into the high of this 1. And when DIA set a higher low against the daily low, while SPX and QQQ actually pierced through it, that gave me the evidence that I need that I wanted to be in DIA. So I entered here towards the end of trading Thursday and just rode this up Friday. I didn't top tick the very end, but I got out right around 331 for just a massive profit. And that gives you an idea of how I use EW, some confirmation and invalidation levels, and also trying to figure out which one I think is in position to run. Okay, so that takes us through the main indices and ETFs portion of the video. If you're not interested in individual stocks, you can turn away here, but I think we want to take a look at some of these individual stocks, and let's certainly make sure that we do that here with the big names. And I think we've got to look at the big names in both ARKK and XLY, and we're going to talk about Tesla and Amazon. So we see Tesla here with 3 awesome weeks in a row, moving up at what I think is just an early kickoff of this intermediate wave 3. And so I think there's still a lot of buying opportunity left in Tesla. Now, in the short term, does it make another stabbing attempt at that downsloping 200-day SMA? A lot like it did in mid-Feb. We just have to wait and see. Into the small time frames, what I would be looking for primarily in Tesla, just like ARKK, is that wave 2 pullback. Okay, just like the Qs. So it's got delivery numbers coming out this weekend. This could be the catalyst for a bump to stab that SMA upwards at 215, or it could send it down. So we're just going to have to wait and see. But again, even if we stab upwards, I'm still looking for some recoil. I'm not going to chase a gap. I want to make sure that I'm looking here to buy a dip. Okay, now into Amazon. We won't look at all of the big tech charts on the daily, but Amazon is one we've got to look at in a recovery position here that I think needs to grab your attention. So a possible double higher low within what I think is still an early part of this move. We know that Amazon makes up about 25% here of the XLY sector within the S&P. And I want you to pay attention. Look at what happened here in XLY to end the week. Possibly massive bull flag breakout, a golden cross within pennies. Take a look at what happened the last time it golden crossed. This was not a time to be bearish the stock market. I think it's imminent. I think you want exposure here. And we're looking at potentially, as I would show you, a massive recovery in Amazon to help get money flowing back into that name. Now, in the short term, I thought maybe it would happen a little bit sooner, and it did not. I'm just looking for a pullback zone to that key $100 psych level, and this is where I would be looking to add and certainly trade it from the short term. Okay, now, other short-term charts here. Apple could take a stab up into the upper 160s to finish a minute 3, down to a minute 4. That's where I want to look to load. Again, 4 cannot trade into 1, so we've got to see price at 156.30 hold, or we're looking at something a little more bearish. Google, also a name I really want to make sure that I've got on my radar. A pullback here into the 102 area has my full attention for a buy. Now, Meta and NVDA, I think these two names, I have potentially these done. Now this can extend even further up, but I am looking elsewhere than Meta and NVIDIA. I will show you that NVIDIA chart. When I start seeing daily divergence on what could be a completed 3 move, could we stab here into the 280s? Absolutely, but it's not my primary look. I think there's places elsewhere I want to look for moves to run. But I do certainly think there's more left on the table for Microsoft. So again, could we get another buy opportunity early in the week? That's my primary look. And when I'm seeing these things all in confluence, high probability of what I'm looking for. And now we just look for the execution to act on it. Okay, there's our big tech look. Now, I don't want to overlook growth. If I'm bullish, ARKK, I've got to show you a variety of names. I already showed you Tesla. Here's Square. Now, Square, the recipient of some bad news in late March, then a pretty nice recovery up into that downslopey 200-day. But I think the lack of pullback to test it, I think is needed. So I'm looking for a pullback in Square, going along with everything else I've shown early in this week. ROKU, a name high on my list. We have a years-long resistance diagonal within a 3 of 3 move. This has my full attention. Now, this diagonal has not given many consecutive closes above it. In fact, it hasn't given any. So do we see another testing move down? That's what I would prefer here on some short-term divergence to test against it, hold it on a daily move, and you better believe it, I am adding here to ROKU. Okay, shop, we can look at that weekly. Look at this basing setup here. We've got that double divergent weekly low, rare. We've got an attempt to establish here that inverse head and shoulders, a breakthrough, a retest, and recovery. This is the kind of basing action in a stock that you want to see. So we look into the daily. I think a lot of room left here on the upside in a name like SHOP. Now, in the short term, I think we're overbought and I think it's divergent. I would be looking again for a pullback, just like most everything that I'm seeing here, something back into the mid 46s. And Zoom is a heavy component of ARKK. You can hate the stock and you can hate what it did to our lives during the COVID era, but we can't ignore it. What I see as a potential double higher low right against the volume POC, we see Zoom pull back to the $70 level, and I am interested in a 3 of 3 move. Okay, so that gives you a great look at individual names. I personally, exciting for me to take you through individual names when I really haven't seen great setups in them, at least sustaining breakout type setups for a long time outside of big tech. And I think we've got the ingredients in place for a very surprising move. Okay, so that's everything that I wanted to show you today. Certainly hope that you enjoyed it. Let me just get you back into that quarterly chart for the S&P and just show you that it is not the same look on the highest time frames that I chart and find value in against secular bears. So if you are standing in the way of that, again, I would just ask you to try to check your bias and just try to make sure that you're letting what we're seeing historically with price closing months and quarters with important breadth thrusts. Let's see this play out. As I said, I do not want to be on the side to miss it, and I plan to be here for the long haul to take you through it. So in addition to what I'm doing now with Twitter and these videos, I've got some exciting releases coming up with PPT. For those of you that want more specific investing ideas, trend following ideas, those of you that are interested in short-term trade ideas, make sure you stay tuned to this space and my Twitter account. There's some exciting things coming up here from PPT and what I think could be a very exciting, surprising, unpopular, sure, I'll take that as well, move up through years to come through this decade. Stay tuned. I think we're in store for some pretty exciting times.